All right, hi guys, welcome back. Welcome to the channel. If you're not a subscriber and this is your first time to the channel, or if it's not a first time to our channel and you're still not a subscriber, please click on the subscribe button, hit the little gray bell so you get notified when we update content. Now, as you know, what our goal here is to support you as the small business owner and provide information that's going on and talking by our politicians, the regulators, and such, talking about what we call the 5 economic termites. And what are economic termites? Taxes, inflation, time, laws and regulations, and debt. Of the most detrimental of these 5 termites is laws and regulations, our politicians, our regulators. Now, here's the thing. Today's video about today's article is a great example of laws and regulations, how it's going to increase taxes, how it's going to increase inflation, how it's going to increase personal debt for businesses and individuals, and also how it's going to cause a time crunch in people not being able to reach a certain retirement age that they're striving for or looking for. So without any further ado, I'm going to go ahead and minimize the video here, put my picture up in the corner, and I'm going to go through this article by the Tax Foundation talking about what just came out the other day in the article. So let me go ahead and minimize here, and let's dive into this. Okay, so California considers doubling its taxes. Yes, that caught my eye as well. And so a proposed constitutional amendment in California would increase taxes by $12,000, $250 per household, roughly doubling the state's already high tax collection, to fund the first in the nation single-payer health system. Okay, so forget Obamacare. The state of California says we are the new emperor. We are the new system. We are going to do what we want to do, like they have always done. They forget they are not the prom queen anymore. 30 years, 50 years removed. You're just like everybody else, and your decisions, your mismanagement is causing this to get worse and worse. The top marginal rate on wage income would soar to 18.05%. Nationally, the median top marginal rate is 5.3. Okay, that's almost 3 times larger. And the state would adopt a new 2.3% gross receipts tax, and at a rate more than 3 times that of the country's highest current gross receipt tax. So California is really thinking that people just love the weather there so much that they're willing to double or pay $12,000 extra a year. So let's continue to go through here, because you and I know it'll be way more than that. So all told, the new tax package is intended to raise an additional $163 billion per year. Well, as we know federally, same goes with states. When the federal government and the state do math, you know the math is always going to be wrong. So they think they're going to raise $163 billion, which is more than California raised in a total tax revenue any year prior to the pandemic. So they've never raised this much, ever. And so I guess they want this to be a first as well. All right, the new tax would take 3 forms. A surtax. Now, if you've ever read my book, Economic Termites, when we talk about laws and regulations, which is the last chapter, we talk about surtaxes, excise taxes, a tax that they pull out of thin air just to create because of. And it's becoming more and more popular since the beginning of 2020. Surtaxes atop the current individual income tax structure begin at $149,000. Now, I'm not sure where in the country you are when watching this, but $149,000 of income in California, especially in the Bay Area, San Diego, LA County, as well as Orange County, you're barely getting by. If you have 1 or 2 kids, you have a couple cars, both are working, and you own a house, you're barely getting by. The cost of living is so absorbent there. A graduated rate payroll tax system with the top tax rate kicking in for employees, not just the owners of businesses, but the employees making more than $50,000 annual income. Okay, now A gross receipt tax of 2.3%, excluding the first $2 million of business income for the business owner. All right, now, 2 states currently have payroll taxes for purposes other than funding their unemployment insurance. So think about that. Most states have payroll taxes that fund unemployment. So if something bad happens, you're no longer employed, we want to help you out. So the employment insurance system helps people out. Okay, so Massachusetts has something different. They have a recent adopted payroll tax of 0.68% is imposed atop the state's 5% flat individual income tax. And in Nevada, there's a payroll tax of 1.475% in lieu of any individual income tax. I get that. If you don't have any income tax as a state, remember, governments only generate and run their business based on tax revenue. That's it. That's been from the very beginning of kingdoms and kings running their kingdoms. California would impose a payroll tax of up to 2.25% on top of the individual tax that already has a top marginal rate of 13.3%. Now, not everybody's in this top bracket, so I don't want to put fear into everybody. Most people are at 9.3 or 11.3. But still, when you're adding the 2.25 onto 9.3, now you're in double digits. When you're talking about just normal taxes and income taxes on top of the dollar plus per gallon of gases, and I can keep going down the line. Similar to several states have gross receipt tax, the GRT, in lieu of corporate income taxes. Ohio, for instance, there's a 0.26% gross receipt tax adopted to replace the state's corporate income tax, capital stock tax, and the business tangible property tax. In California, by contrast, a 2.3% gross receipt tax, almost 9 times Ohio's rate, okay, would be imposed in addition to tangible property tax and an 8.84% corporate income tax, okay, and an aggressive one at that, the only state-level corporate income tax in the country with a worldwide tax base. Go California. How much do you love that weather, folks? And while 16 states either implemented or enacted individual or corporate income tax rates in 2021, and more are looking to join them, okay? California policymakers want voters to approve 5 new surtaxes with a top rate of 2.8% on top of the current top rate, okay? Now, marginal income tax rates and the proposed new 2.25% payroll tax for a combined top marginal rate of 18%. What this means, folks, is that federally, you're also in a 37% tax bracket. Okay? So if you take your 37% tax bracket at the time of this recording, that's a 55.05%. Okay, you're giving more to the government than you're keeping. How hard are you willing to work? This is more than 7% points higher, 7% points higher than the next highest rate, which is Hawaii at 11%, New York at 10%, and New Jersey and DC both at 10.75%. Issues with the proposal abound. Shocking. Right? For instance, the payroll tax exempts employers with fewer than 50 employees. Okay? Resident employees. All right? So you have to be in the state of California. So what that means is that if you're a business with 49 or less employees, this technically is not going to affect you, which that is the good news. But part of being business is being successful, and your business grows, and you hire employees because you're not able to do all the things yourself. So what the state is basically saying is that, well, if you're at 49 employees, let's assume they make $80,000 a year, and you're at 49 employees. The company has no payroll tax burden at this point, meaning based on this proposed law. Hiring one additional employee will generate a tax bill of $90,000, which is more than that $80,000 employee. Okay, how excited will an employer be? Okay, so what California is doing is pushing people out. They're pushing people out. It's very basic. Gross receipt taxes are widely understood as extremely disruptive and inequitable taxes. Yes, because they are imposed on businesses without regard to their profit margins. Okay, so this is very important. For low margin businesses like supermarkets, such as 2.3% of gross receipts, and they're going to use an example of Kroger. Kroger's profit margin dipped down to 0.75% in late 2021. Okay, now they have historically hovered around 1.75%. Which is still lower than the 2.3%. These taxes are even worse for businesses posting losses, including startups, right? How many businesses and young people want to start their businesses and strive to do something on their own? Well, you haven't turned a profit yet because they are taxed on the receipts, even if their expenditures exceed revenues. This is the problem of taxing revenue. So historically, the government, the U.S. government has taxed businesses based on not revenue, but based on profit. And that's why there's different business entities that are considered pass-through, such as S-corps, LLCs, as well as partnerships, where the corporation has a profit or a loss that would pass through to the individual owner and owners, okay? And that's where the tax rate would fall onto their individual tax bracket. With the state of California saying, oh, we don't care about that, we're going to look at top line revenue. So if you as a business are trying to raise your prices because of these taxes, guess what? You're causing a tax burden on yourself, as well as, don't you think this is going to cause inflation to increase in a state that is already very high from a standard of living perspective? So the surtax, meanwhile, with additional rate of 0.5% to 2.5% on top of the current income tax, does not take married filers into account. So it doesn't matter if you're single or married, and the 149 stays in place no matter what. So while California state income tax avoids a marriage penalty for most filers by doubling brackets width, does not on this new surtax. Sorry, the surtaxes. Okay, I keep saying singular. There's 5 proposed. Sorry about that. The $149,000 kick in at the 0.5% surtax and applies to individual or household income equally. So I guess that's good. They're treating everybody the same. I say that tongue in cheek, of course. But because California is so smart, they decided to create a surtax and essentially create 18 brackets for it. So more of the folly. So let's look at these brackets. So if this is as clear as mud, I don't know what is, right? Look at this. This is absolutely ridiculous. So these taxes, moreover, would be increased by simple majority in the legislature. So what that means is that California has a supermajority, meaning that it doesn't matter if there's any Republicans voting or not. There's the Constitution. The California has a supermajority. They can pass whatever they want without any fight from any other political party. Okay. If a future legislature decides that doubling the state tax collection was insufficient, the Constitution's supermajority requirement would not stand in its way. And while the new surtaxes are inflation indexed, which the taxes are going to cause inflation, the payroll tax second bracket is not. The legislature is authorized to suspend inflation indexing at any time. Okay. So this is not the first time California has tried to do something like this. They do need to. So they're thinking that that's going to be about $200 billion in state funding to create this single payer health system. Okay. Now, the California needs federal approval to redirect approximately $200 billion they're getting in federal funding. So with a similar administration running the country as is California, more than likely California is going to get what they want. So the full cost of this program is $400 billion a year to do a single payer health system. Okay. Now, those of you that are still in California, there's been a mass exodus. We all know this. Okay, California is one of the few states that is having a negative growth population. Okay, which is why they allow so much immigration and such to come through the state. Whether I'm not saying that's good or that's bad at all, I'm just saying is that they're hemorrhaging because a lot of taxpayers are leaving the state. So you have to replace that somehow. One of the ways they're thinking that makes a really good sense to replace that is by just taxing all those that are still there even more. That'll replace it, and everyone will pass it. They'll be all hunky-dory and excited to do this, right? The proposal of the 163 billion a year tax increase. Remember, let me repeat this. California has never raised this much money ever. Now these surcharge taxes are going to increase by 163 billion. Okay, California's Legislative Analysis Office is projecting a 31 billion surplus after tax collections grew an annual rate of 30%, which is the fastest in 4 decades. Okay, so California saw tax collections grow annual rate of 30%. You as taxpayers, how excited are you about that? They have a surplus of $30 billion, and now they're coming after you for another $163 billion because they got to spend that $30 billion. It's burning a hole in their pocket. Okay? Like most states, California's revenues grew rapidly over the last 2 years. Unlike most states, however, California faces a downside risk. Okay? Here's what we've been talking about. Faces a downside risk in the form of continuing exodus taxpayers. And don't think that this tax law change is going to cause people to make a U-turn on the road and come back to sunny California because, oh my goodness, I want to pay more taxes. All right, California cannot get it through their thick head that having a rail speed train in the state is not necessary, but they're going to spend billions of dollars on that. Having a single payer health system in California is not needed, but they're going to spend 400 billion for that. California lost 0.8% of its population in a year, in 15 months, basically. The 4th largest decline in the country after DC, New York, and Illinois. And there is no coincidence here. These are all blue state ran. So, I'm not saying that this is a Democrat issue or liberal issue. All I'm saying is if you're a taxpayer, you need to take consideration of what's going to be happening. And if you're a business owner, please understand it's not just your employees now having to pay more taxes because guess what? They're going to ask for pay raises. You're going to have the cost of hiring and training new employees because employees are going to look for higher pay elsewhere, and there's going to be a raised costs in doing business because of these decisions. So that's what our channel is all about, folks, is helping you understand the read between the lines. Not that you didn't understand this, but how this trickles and affects all the other things you do as a business running. Okay? And I'm not telling you to leave California. All I'm saying is that you need to be prepared for this. And if you're not planning and being prepared for this, you're going to get slapped in the face, essentially. And California is going to do it for you. So hopefully this was helpful for you. If you have any thoughts, comments, please add those down here. Again, if you like this, give me a thumbs up. If you want to be a subscriber, hit subscribe, tag the little gray bell so you get notified as we update more content. Thanks so much, guys. Appreciate the time.